I think we're live. Okay. Hey, everybody. Daniel Char here. And this week we have an amazing guest. His name is Vinneys Smile Chopra. He's a real estate investor. He's got a portfolio of over $440 million. What is that? 4,500 doors, right?
Yes.
You're an
Yes.
author, you're a speaker, you're a mentor. So, Vinny, you're a very, very busy guy. So I really appreciate you taking time out of your day and having a conversation with me about real estate investing.
Oh, I'm very excited, Daniel. Thank you. Thank you so much. It's such a pleasure. I hope I can bring great value to your audience.
Absolutely, absolutely. Well, we'll first start off with your story. I know you have a very, very unique story of coming to this, coming to your country, not our country. Like, I know we just spoke about coming to Toronto, but from where you are, you went to North America in what, $7, and then you.
Yes,
Yeah.
it started about 44 years back, actually,
Yeah.
When I'm an engineer, mechanical engineer, Daniel, from India. I grew up in New Delhi, India, and I always wanted to come to USA for the land of opportunity, kind of try my luck here. Then I did my engineering and worked with Larsen Toubro. Some of your audiences over there might know that's the Reliance Group now in Bombay. And then I came here to George Washington University in Washington, D.C. So actually, that's where I entered, came to New York, and then to Washington, D.C.
Awesome, awesome. So I'm going to throw you a curveball. So
Sure.
you probably won't see it, but my family is actually from India too.
Oh my gosh.
Yeah. So yeah, even my grandparents, they're from Calcutta, right?
Calcutta,
Yeah.
yeah.
And then
Sure.
my parents from there too. And then
Havra Bridge and the Baliganj and all that. Baliganj, I know all that too.
so we're Hakka Chinese, and they immigrated to Canada in Toronto.
I
And
see.
so I'm the first generation Canadian here. So
Awesome.
yeah,
And I love Toronto. Just I was talking to you
that's what we're talking
because,
about. Yeah.
yeah, my wife Kanchan, we met actually in Pittsburgh, California, in Pittsburgh, Pennsylvania. I was in Ohio at that time. Her brother lived there, but her two sisters always lived in Toronto. They still do. And she lived in Toronto for 6 years. She came there when she was 18 years of age, I think, or something like that. And then, it's been a very big association with Toronto, Mississauga, Oakville. We went just before COVID. We went to Niagara Falls, of course. We've
Oh,
been there many
beautiful.
times. Yeah.
Beautiful. So I think a big question that our viewers would want to know is, how did you start off with coming to a new country, starting a new life with $7 to controlling $440 million? That's the $1 million question.
It just happened overnight, Daniel. No, I'm just kidding. I'm kidding. No, it took us a long time. Actually, I'm an engineer, like I said, but I had to earn money for my tuition. I went to George Washington private school and for MBA. So one of my friends said, Vinny, what are you doing for summer? I said, I don't know. I just arrived from India. I couldn't speak much and people couldn't understand me at all. They can't understand me still. He says, I was selling books, encyclopedias and Bible books door to door. I said, what? I said, okay, I'll go, and lo and behold, that's what I did. I went with him within 3-4 months. We went and made some money. I was knocking on doors outside Atlanta, Georgia, calling on families and just walking because I didn't have a car or bicycle or nothing. I was just walking all day long. And we usually work in that company 80 hours a week. What? Not 40, but 80. So
8 hours knocking on doors?
Knocking on doors from morning 8 o'clock or whatever until 9 o'clock at night because of the summer months, right? The days are longer.
Yeah.
And then somebody will come and pick me up, and we'll go and live with the other students in that headquarter, we called it, like a 1-bedroom, 2-bedroom will rent from a family kind of thing. That's what changed my life, literally, because I enjoyed talking to people and, they will say, come on in, and, my accent and all that. And I sold a lot of encyclopedias.
Wow.
So I became, one of the top salesperson, you could say. So an engineer turned into a salesperson and a marketing person. And my degree was in MBA in marketing and sales. So that's when I put my engineering into a box, kind of. And I've never opened the box for 44 years. I only worked in Larsen Toubro. And then we got married. I got into a full-time position. I sold door to door 3 years in a row. That gave me a lot of confidence, a lot of commitment, perseverance, hard work, literally hard work, a lot of hard work. I got hit by a car. Then I bought my first car for $700, and then I came the next year again to sell books. I brought some more students. This is a very old company out of Tennessee, and they work with students from Stanford to Boston, Harvard to George Washington. Only the college students can work. Yeah.
Wow. Wow. So that's very interesting, from engineer to sales and marketing. So how did you get into the real estate game, and how did you start finding investors, and who taught you how to start investing in multifamily residential real estate?
Totally. It all started about 40 years back when we got married. We just celebrated 40th wedding anniversary last year, 2020. Thank you. And we moved to California near San Francisco. We live in Blackhawk Country Club right here, Danville, Blackhawk. It's called, on the east side of San Francisco. And we have been living here for over 40 years. And that's when we moved, when we got married in Ohio. And we made a first trip to Toronto, actually, because my wife had some accounts over there. She wanted to pull out the money and all that, which we did. And then we moved right here to San Francisco area. We've been living here ever since. We have 2 children now. Neil is 37, and he went to Berkeley and did electrical engineering, computer science. Monica, our daughter, she's 34 or so, and she went to UCLA and did MBA after that, like I did MBA. And she's fully immersed in our business, but our son works for another very big company. But Monica is our VP of operations. How did we get started was when we came here in 1980, our friends circle will talk about real estate. I mean, we didn't own. We owned in a small townhouse, not owned but rented, right? But they were saying, you know what? It's good to buy these single-family homes and things like that. That's what we started to do, and we went on buying lots of single-family homes all across. Here in California, of course, Georgia, Texas. I'm trying to remember more places, and all over. Then I became a broker. You're a broker too, right there. I became broker in 2005. We are going about 16 years back now, right? So my wife said, would these homes be giving us the kind of lifestyle we want to have? And the answer was no. Because the single family homes, somehow, things can go wrong. And, you have, we never managed our single family homes at all. We always gave them to a management company. They'll charge us 7 to 10%, of the monthly rents to manage them, so that we don't have to worry about the tenants and trash and toilets, people call it, right?
Passive income, right? Yeah.
Yeah, exactly. There it goes. If the appliance goes off, there goes the cash flow. So 2006, 5 or 6, I said, you know what? I want to get into commercial. Literally, that's the reason. And then I said, okay, looking at office space, looking at multifamily, looking at hospitality, shopping centers, multifamily, being an engineer, made total sense to me. I said, oh my gosh, if I can have 20 different homes in one place, 20 residents, collect the rent and have the economies of scale, that's what just got me started. So it took me, I said, okay, how can I learn, right? I looked in internet, I looked around and saw some coaching people and all that. That's what I did. I paid good amount of money, 30, 40,000, just for me at that time, to learn the tricks of the trade, which is giving me millions now. So that's
so basically you started off with a single family home, and then you started buying multiple single family homes, and then you went to like a big multifamily, and then you hired some mentors to guide you to the finish line to to where you are today, right?
Totally, totally. Coaching, in the 2006, 7, 8, I learned a lot. And then I bought my first 14 units. 14 units. Now look at that, for $180,000. 80,000, 180,000. Then I bought for 2.4 million. I remember I syndicated. That's when I got really, coming back into my book that I wrote, Apartment Syndication Made Easy. That's what has been my main focus for the last 14 years, is to how to pool money together very nicely from the investors. I had 0 investor to 1 to 6 to 8 to 10 to 15. Now we have 338 investors.
So how do you start looking for your first investor? Like you said, you started with 0. You have to present them with something, right? And then most investors, they'll say, we have the money, you have the deal, but what kind of experience do you have? How do you go through those obstacles?
Very good question, Daniel. I would say definitely the genuineness, being totally trustworthy, and being very open and frank. That, when my first investor, I sat in his living room right here in Fremont, California. He says, Vinod, how much money have you, made so far? I said 0. He says, oh, single family homes, I also invest in them. I said, multifamily is the way to go. I had 4 or 5 slides. I put it in a PowerPoint. I took my laptop. I still remember sitting there. He says, do you have any experience? I said, no. He says, where would you be buying? In Texas. Are you going to move there? I said, no. So everything was no, no, no. But then I said, you know what? But the main thing is why I'm so excited about multifamily is because of this. Literally after 20 minutes, he says, I'll write you a check for 50,000. Literally.
And that was that was the first deal.
That was my very first deal.
Yeah.
And first check ever. And then, I couldn't take the money because I was taught you have to get the PPM ready, private placement memorandum. You have to open the account. You have to have the LLC's name, all that, right? So then I told them, I said, I'm so glad you're saying 50,000. I'm going to, get back to you because my attorney's putting the LLC together and the PPM, private placement subscription agreement and operating agreement. Then I will come and you can transfer the money into the bank account. So that's what really got me started. And then we were also doing webinars and actually live presentations in hotels. I still have those presentations where I would invite and pay for lunch for these investors to come to listen to me, right? And then after that, they will fill out a form if they're interested for me to meet again, because in the SEC ruling 506B, you have to have pre-existing relationship with the investors. So that's how we started. We went to boot camps and we collected a lot of cards. You know how it is.
Yeah.
Right?
Networking is key. That's where most of the money is made. That's where most of the investors start funding deals, through handshaking and through events. Most of my investors are found that way too. It's but now with COVID, it's all through Zoom. We still have networking, and I find that that's the best method of finding money, because you have a deal. Here's my deal. Let me show you what it is, and then let's work together and then JV that deal.
So true. You can joint venture, you can take, tenants in common, you can do syndication, which is the third way, where you have the PPM and all that. But you're so right. It's just building from right where you are, people who trust you, right? Family, friends, acquaintances. I have like 5 circles in my book also, I explain. And that's where it is. You got to really be talking to people. Don't assume whether they have money or not. They have no money. Everybody's got money. We have 31 trillion with a T, $31 trillion in retirement funds in USA. I'm sure Canada also has so much money. Quite a bit, quite a bit. But again, people can invest cash, they can invest, but a lot of people, Daniel, sometimes don't know that they can put money stock market, everybody knows how to buy quickly stocks and sell and mutual funds. But if they can self-direct, we call it in USA, self-directed retirement funds, they could invest that money through Roth IRA, 401k, SEP IRA, all those things, right?
That's like what we call in Canada RRSP, retirement
I
savings plan.
see.
So it's the same thing. That's our 401k. So what you're saying is that people have an option. Instead of only looking at stocks and bonds, what they can do is they can take that same money and put it through into multifamily investing, and it's tax-free, basically.
100%. Well, when you say tax-free,
Or
if
deferred.
it's a Roth,
Yeah.
it's tax deferred. You're right.
Yeah.
But then also we take cost segregation or accelerated depreciation, which is a paper loss, right? So that is a very exciting thing in USA. I'm sure over there too. In Canada, there must be something like that, because what we do is we have the LLC that buys the property, a pass-through entity, we call it, right? So it's a single purpose entity which is passed through, so that all the properties making profits, but the paper loss of depreciation makes the whole LLC go negative. Like my 100,000 investor usually get minus 61,000 as a passive loss, the very first year in USA.
So there's no taxable income.
There is no taxable income, even though they got the preferred returns, we call it, or dividends or cash flow. They might get 30,000, right, from us, or 20,000 or 10,000. But their K1, it's a K1 in USA, which is given on the rental income, loss or income. It's minus, that's what it was previous year, minus 61,000. That's amazing.
That's amazing. So we were using a lot of jargon right there. So for anybody who doesn't really know what we're talking about, so I guess what we could break it down is you have a portfolio that you help people invest. And if somebody has, let's say, an RRSP account or a 401k, what they can do is they can write you over a check as an investment, and you guys will handle everything. And basically all they have to worry about is getting a monthly dividend or monthly income from your portfolio. That's basically what it is. They don't have to look for the deal. They don't have to do the underwriting.
Never.
They don't have to do anything. It's basically hands off.
Hands off, totally. Yeah. We call them as limited partners or passive investors, right? And we are the general partners or GPs or key principals, and we do all the vetting of the deals. We have to look at hundreds of deals to find one. I mean, I just bought $35 million one, close to it, in Austin, Texas, 308 unit apartment complex. So you could see that, from 14 units of 180,000. Now, of course, we kept on buying, kept on. Then I bought $52 million one in 2019 over there in Florida, then 35 million one. Then we just closed during COVID in September, middle of September in Austin, another 34 million 750. Now I am into senior living, assisted senior living, ground up also now, Daniel. And we'll be building and buying 200 million a year. Wow. So my goal now, this little boy who came here with $7, my thinking has gone so high. I've got a goal of $2 billion in the next 10 years.
Have you ever imagined that this would happen in your lifetime from when you first started?
Literally not. I mean, I was just a W-2 guy, motivational speaker, fundraiser. I've been doing fundraising in my previous life after selling books and all that, but that was raising only thousands. But I didn't know. I've given 11,000 speeches, maybe even 12,000 by now. But the thing was, God was preparing me in those speeches to really be ready for raising millions of dollars. So now I can raise 10 to 15 million in a couple of days.
Just a couple of days.
Yeah.
Wow. So I have a question about your multifamily investing. I know there's pros and cons with everything, even single family condos, everything is pros and cons. And I think that like you mentioned, one of the big benefits of multifamily is economies of scales. You don't have to fix 20 roofs, you fix only one roof, you got one location, right? So there's a lot of benefits on that point. What are some of the downsides of multifamily investing?
I would love to share. Of course, with multifamily, it's only one transaction instead of having 20 different houses. If you buy, that's 20 transactions. Loan also, as you know, right? 20 different loans qualifications for homes. In multifamily, it's easier to get loans also. Only one loan because the NOI, net operating income, dictates the loan terms and the quality of the money that's coming in. The downfall of multifamily, let me think through here. There are quite a few risks have to be mitigated. Let's talk about that. Of course, the vendors, you're dealing with so many vendors, and the contractors can really rip you off. Sorry, I have to say that because we've been vertically managing all our assets, right? At the peak, we had like Monil Investment Group is acquisition side, Monil Management Group. By the way, Monil is our kids' name, Monica and Neil together.
Beautiful.
So that's our legacy we'll leave behind. But key thing is that Monil Management Group, we had 134 people in the peak, full time, because we were managing everything. So mitigating the risks by having I would say definitely what are the different things in multifamily that can give us trouble, okay, as operator? The sewer lines, which are old and dungy. And what happens is, their bottom of the side starts giving up the wrought iron, right? Older pipes. So that's a big one, which is a downfall, which I got stuck twice in my lifetime with out of 29 acquisitions, and which was not bad. I mean, we did get 32,000 to 52,000 per building we have to pay to repipe them. So that's, we have to plan for it. Roofs can also give you trouble, leaking of roofs, flat roofs. I bought maybe 3 flat roofs out of 29 acquisitions. I will never buy flat roof again because they really take a lot of your cash flow to fix them. You never can tell which side of the roof is bad because it's flat. It could be leaking over here, but the roof needs to be changed over here anyway. The other things are appliances. Oh my gosh, older buildings, we got to allocate the capex and have that reserve ready. Otherwise, it can wipe out the cash flow of the investors. And the other thing is the air conditioning units. Those are really, really huge also, cost 2,000 to 3,000 to replace. So all those are the down risks of multifamily if we don't plan well. If we don't plan well, that can be in trouble, right? For the operator like me. What are the downfalls will be if you are not doing good underwriting and you are taking your assumptions not as conservative. Some of the syndicators like me can just push the cap rate at sale to be at a lower level. What does that mean? That you're saying the valuation is going to increase pretty steeply. We don't like that. Even though we bought things at, let's say, 7.5 cap, in 5 to 7 years, we should put 7.75. Give it an error on the other side so that, we are not giving very rosy numbers to our investors, right? So that's the downfall too. We have to be very conservative. The other thing is our full due diligence on the area we are buying. See, I've already completed circle of 22 of my investments out of 29, which I have given my investors 18 to 69% return per year.
18 to 69?
69% per year.
Per year.
Yes.
Holy
40% I've given many times per year. 40%. Then 37, 27. I know more and more lately the deals have been very expensive in USA. You probably find it in Canada too.
It's
You know,
getting
the
very
price.
heated right now in our market now too. And just not in the core. So right now, like in the downtown core, it's down, but all the all the upskirts are all on fire right now. It's just going.
They are okay.
Yeah,
Same thing
yeah.
here. Expectations of sellers have gone up so high. The compression of the cap rates have gone so low, 4.5, 4.25. In California, where I live, it's 1.5 cap rate right here.
Wow.
It's ridiculous. It's totally ridiculous. I never buy where I live right here. I've
That's
been
the next question. There's an exodus in California.
huge, huge,
So
huge.
people are leaving it, just like in New York. How is that affecting real estate? Or does it not have an effect? Because I know like movie stars and all these very wealthy people, they're living in a different neighborhood than the average Joe, right? Like the 35 million, $40 million houses. Are those going to be affected as well?
That's a very good point. I would say so. It all depends. Of course, a lot of people are gravitating towards the no tax state, we call it, right? No
Texas
income
and
tax.
Florida.
No
Right?
income tax like Nevada, right? Like Florida, right? And Texas also, there is no income tax. And Oregon, I think, is Washington. Oregon, I think, no income. But California, we are hugely taxed, 13.42% at the high level, right? But you're right. What has happened in the COVID also, Daniel, the Silicon Valley, which is only 45 minutes from me right here, it's disintegrating because now with the COVID, lots and lots of engineers can telework. I mean, they can be living anywhere. So they're moving to Austin, to Atlanta, to Dallas, to Florida. That's why I bought in Austin because I had bought 7, I think, around Austin in 2010. I sold them all. But then I bought in Melbourne, Florida, 2 years back, and we were collecting 98% of the rents during COVID last year. I said, oh my gosh, we got to go back to where the tech jobs are. So Austin came on the top, So we rushed back there, and I knew some brokers from 10 years back. I texted them, called them and texted them. They started giving deals, and we were able to close one, fortunately, in September last year, So I'm very big in the areas where there are tech jobs. So we are also looking into Tennessee, into Indianapolis areas, and of course, Florida, and also in Missouri, St. Louis. But my new business, which is a very big, solid business, is 10,000 people are turning 65.
Senior
USA, every day.
Yeah.
Every single day, silver tsunami. I'm silver too. I'm 68. I'll be 69 this year in August. But I have so much passion for the next 20, 30 years.
You got energy like a 40-year-old. I love it.
Thank you so much. I just love it. Miracle morning in the morning, exercise, eating right and healthy. I would like to be totally straight. I always tell my wife, when I'm 89, I want to be staying just like in this chair, like that, and just having fun, and that's the key right there. But the big thing is with the silver tsunami, there is a huge demand. I'm sure in Canada too. As the population is aging, assisted senior living is the niche that I'm going after. It's a multifamily, 88 units to 92 units, which we are building for about 16 million. Mm-hmm. And it takes us about 2 years to, get the permits and all, and build it about in 1 year. We can sell it for 24 million. Wow. Whew. So there is a huge demand. So that's where I said in the early on, $2 billion. That's our small goal to do that in the next 10 years, So we are building and for middle class, we are building luxury actually, Daniel, for that price, but we are charging only $4,600 to $5,400, which includes 5-star dining, 3 meals, snacks, caregiving, and the spa, and the movie theater in there, and all the meeting rooms and dining halls. And then outside we only build one story, just one story, no elevators, and with 4 to 6 courtyards.
Almost
So
like a hotel, but
it's like a hotel. You're
yeah,
right.
it's like a resort. Sorry, it's like a resort.
Yeah,
Yeah.
sure. And we our own transportation. So Hampton Manor is our name brand, our partner, which I've joined hands with. He's been doing it for last 9 years. 9 years. He came from Pakistan. I came from India. And look at that. He was. Yeah, we had the best of the best. In USA. Yeah, yeah.
Yeah, amazing. So when is that coming?
It's already there. It's already there. He has built actually 23 communities, but with me now getting involved, we can raise so much money. We started 4 already. 4 already. We'll be starting 4 to 6 every year. Every year.
Wow.
Yeah. 6, usually 6. So that's why I said 200 million a year, because we'll be building them and then we stabilize them and then we sell them. And he was selling them to the REITs, for health REITs, we can call it, or funds. But now we have made our own REIT because our net worth has gone up. So we'll be buying everything and cashing out the investors who want to cash out after 3rd year of the buildup, or they can do 1031 exchange into the next 3 years and next 3 years and won't have to pay any taxes at all.
So that's a deferral as well, right? When you cash out and you bring it to the next deal.
Yeah, exactly. Because see, it's a tax difference. That's what I wanted to explain. And I teach it in my academy. I have an academy also now where I teach hundreds of students, and people pay me a lot of money to teach them what I've learned, right? Just like I paid 30, 40,000, right?
100%.
Yeah. And I coach myself personally on Wednesday evenings every week. If I'm not traveling, which I'm not traveling at all for 11 months, but that's where, and it's very exciting time for me to meet with lots and lots of great people all across, USA, and some from Canada, some from even Sydney, no, Oslo, Norway. Yeah.
Perfect. So let's say we have somebody who's brand new in there. Brand new to real estate. What is the best advice you would give them? Let's say they have 50,000 saved or 100,000 saved. Should they go into passive investing like what you're doing right now, or should they go the traditional route of buying a home to live in, renting out the basement, and then because most people do that route, right?
Hacking. We call them house hacking.
Can they just supercharge it and go direct and go passive income? Which one would you recommend?
I would say definitely, if you have interest in really scaling it up someday, and you have a W-2 job right now, please go ahead and house hack, I call it, right? And house hacking is, again, getting a duplex. That's how I did. We got single family homes and a duplex. Then I bought a land of 1 acre in Bakersfield. There were 4 homes on the land. So that's how you always start small. But then if you want to not do anything with anything and you want great returns, invest that money passively with a good operator in Canada or in USA. I don't know what the laws and so forth, but then you can get good returns, like 15 to 18 to 20% returns per year, which is cash flow and equity gains. So please look into those. Look into the syndicators who could provide you those kind of returns. That way you can supercharge your growth that way of the 50,000 or 100,000. But if someday you want to really scale up, like Daniel is doing, like I'm doing, then you have to put forth effort in understanding. It's not that easy, but it is easy. I mean, I've done it. I'm just a regular guy. And the good part is, this book, if anybody would like, by the way, a book, we want to present to your audience free. It's at vcfreebook.com. VC for Vinny Chopra.
We're gonna put that link
please.
in the description below. So free
awesome.
book. That's amazing for our guests. Thank you so much.
Thank you. Thank you. Yeah, vcfreebook.com. That'd be great. But answering your question again, if you want to really scale up, you have desire to be in real estate, start house hacking, saving money, and then you will go to duplex, to fourplex, to sixplex. I always believed in that. And I'm teaching now the youth also. We have a youth academy, free, totally free, because I want 18-year or 17-year, I think even from 14-year onward, you can have your own LLC here in USA and have a savings account. I really believe that one should be entrepreneur at heart, right at the young age, so that you could really, fortunately get the skills. It's so much out there in YouTube, in Google, everywhere. And then parents can also co-sign, with the young children, and they can really learn a lot. Goal is to be able to get your duplex or triplex or fourplex by the age of 21.
Perfect, perfect. So Vinny, do you have one last piece of advice before we go? And how can people reach you?
Oh, sure. The big thing is move the needle, I call it. Please get up in the morning and just be awake. Some of us get up in the morning dead. What do I mean by that? We just say, oh, do I have to get up today? I've got all the problems and everything. I've been a very positive person all my life. And that's why I wrote the second book, which is The Positivity Brings Profitability, which is again getting great, great reviews. I have been a very optimistic person. But again, remember, wake up in the morning and, just say, hey, this is the best day of my life. And that's what it's all about. Power of Now by Eckhart Tolle. A lot of great books are there, but please, please write down goals. It's only February right now, 2021. We should be writing down goals and then working towards reaching the goals.
Perfect. Excellent. And how can people reach you?
Oh, wow. They could reach me. My website is VinneyChopra.com. V as in Victor, INNEY Chopra.com. And over there, you will see everything. And then you can go from there to investing or mentoring or any kind of things. We teach also. You can passively invest also, all those things.
Perfect.
And then my books are there. Our blogs are there. Our other websites are there.
Perfect. We're going to have Vinny's information in the description and a link to his free book. Thank you once again, Vinny. Thank you for taking your time out of your day. Thank you.
Thank you, Daniel. Thank you so much.